Hi, I'm Owen from Rask Australia. Thanks for tuning in to the Rask Network.
Before we get into today's show, there are a few things we have to go over.
Firstly, what you're about to hear and see is limited to general information only. It's not personal financial advice like you'd get from a financial planner. Also, it's important to remember that past performance is not indicative of future performance. That means that anything that's happened in the past, or we say today, is not necessarily going to reflect what happens in the future. Lastly, please consider that any of the guests or myself are featuring on this program may have a financial interest in some of the products or shares mentioned. That's enough from me. I hope you enjoyed today's program.
Kate Campbell, welcome to this episode of the Australian Finance Podcast.
Wonderful to be back, Owen, to talk about automating your finances.
Yes, automating your finances. This could be your money, it could be your cash flow, it could be your investing, it could be your debt repayments, it could be just about anything.
Yeah, just putting some systems in place to make things just a little bit easier for you so you don't have to think about it every month, because we all have enough on our plate that if we can take some of those financial decisions off that plate, that's going to be much better for us in the long term, and it's going to help us reach our financial goals or just keep the lights on, really.
Yes, if you're the type of person that does not like to look at your finances, who procrastinates like I do, or you just kind of forget to do things, this is the best thing you can do with your money. It helps you avoid those biases and all the things that also creep in, like maybe the market's going to crash, I'll invest later, or I'll start in the new year or something like that. No, you can just get started and let it go just while you eat and sleeping, just let it run for you. We do have an Automate Your Money course that is available on Rask Education. It is completely free. Over 600 people have enrolled, which is super cool.
And you can do it in under 60 minutes. And we introduce 3 different ways to automate your savings, 3 different ways to automate your investments, some things maybe you shouldn't automate, why automation's important, and really just a comprehensive case for automation.
Yeah, I sent out an email, which I know you read over the weekend, and basically said that this is by far the biggest bang for your buck course that we've ever done. So you could just sit down in under 60 minutes, even if you automated a couple of things, it's going to save you hours and hours and hours of your time and effort and energy and probably stress. So if you are listening to this, you haven't enrolled in a course, or you already have and you don't know this one exists, go and do it. Completely free. Completely free. Okay, Kate, we've got a few things to get through on our list. We're going to focus on the ways to automate, not necessarily why or those types of things. We'll give some examples as we go.
Yeah, so I've assembled a list of over 10 different tools that you can use, whether that's a financial tool, a certain account, a broker, or just some ideas on how you can use these things to automate different parts of your financial life. And the first one I've got on my list is BPay. BPay.
A lot of people wouldn't think of BPay as a way to automate. Do you use BPay at all?
I do. I paid some things via BPay just the other day, but I use it for things like uni student services fees, ATO tax repayments, all those sort of things. So some of them you can automate, some of them you might not know about in advance, but even things like I saw my local council was letting me pay rates quarterly. So you could automate that payment if you wanted to, or you could turn on something like a direct debit. So whether it's BPay or a direct debit, or setting up something in the background there, because then those bills don't creep up on you, especially some things that are a bit chunkier like council rates, or if you pay your health insurance annually. Is there any way you could split it up but automate it so it's easier to manage with your monthly cash flow?
Yeah. Over on the Australian Business Podcast, I talked about automating your money. It doesn't matter if you're automating your personal finances or your money, you can do it regardless. Like, I would highly encourage every business owner, even if you just got a side hustle, to automate every single thing that you can. One of the things that I do is the ATO pay as you go. So this is like when you pay tax, you normally pay it quarterly as a business, but you can pay it monthly. You don't have to do that. Once you've got your BPay number, your reference number, just set it to fire every month. It sets, $5,000, $10,000 at a time. So then when it comes to paying tax, you don't have to worry about it. So if you're a sole trader, you can do this too. You can split your tax automatically. There are other tools that do this, but it's super simple with BPay. You just whack it straight in there.
And even if you want to schedule a $100 regular super contribution each month, you can do that via BPay. I've done that before, and that's what I use. Fires off.
Yeah, it's really simple. So that's number one, BPay. Kate, number two?
Number two is automated pay splitting. So the main bank that I've seen that does this as a feature is UpMoney, but you could also set this up yourself. You'd have to set up a few separate transfers so that when your pay hits your account each month, if you're using Up Money, it just happens when it recognizes that chunk of money hits your account. Otherwise, you would have to choose a date for these payments to happen.
Yep.
So your $1,000 hits your bank account and it's automatically split $200 into bills, $300 into groceries, whatever it is.
Yep, cool. Easy. Like it. So Up Money, if I'm not mistaken, automatically reads and knows where your pays hit.
Yeah, so it can recognize that payee.
Yeah.
So it knows, you can say, this is my employer, and it because most of us get paid the same amount each month if we're doing
Or it's from the same place.
Yeah, and so it'll automatically split based off a dollar amount or a percentage amount into different accounts. So if you have certain savings goals, you can already have $50 go here. Or if you want to split it based off that 50, 30, 20%, where 50% is to all your essentials, 30% to your wants, and 20%
to future you.
To future you can have that automatically set up.
Yeah, too easy. So I do this. I don't use UpBank, but or Up Money or whatever it's called. I just use like ING.
Yep.
But any bank can do this. You just wait. If you normally get paid around a certain day, just wait 3 days and then have the automation trigger as a recurring payment and split the money. That's a really good one. Roundups, Kate, really popular, something that we did talk about in the course, or we do talk about in the course. How can people make use of roundups?
Yeah, so if you're going to buy a $4.50 coffee and it will round up to $5 and put 50 cents in a savings account. So some banks like ING and Up Money offer this. There are a few more that I know of. You can turn it on so every time you make a purchase, it gets rounded up to the nearest dollar and that money gets transferred into a savings account. So who knows, over the course of a year, that could add up to quite a few $100s without you really noticing. It's that same concept of when you got home from the shops and you had some spare change in your pocket, you'd put it in the money tin, and then at Christmas time you could open that and then you might have a few $100s for Christmas presents.
That's great.
But this is the digital concept.
Yeah, that's great. And so this is rounded up savings. We'll get to round up investments in just a moment. But an offset account, speaking of bank accounts, what is an offset account and how do you use it to automate?
Yep. So if you have a home loan, and you might have a variable portion of the home loan. So if you've been watching the news recently, you've probably noticed that the interest rates keep changing. At the moment, they've been going up for home loans. So I have a variable portion of my home loan. So each time the RBA makes an interest rate decision, I get a notice from my provider saying, oh, your loan's going up. But one of the benefits of having this variable portion of your loan is you can link what's really a savings account, but instead of getting interest on that account, it's offsetting to the variable account. So I can put my savings in that account. I'm not going to get paid interest in my bank account every month, which is sad, but it does reduce the interest I'm paying in my variable loan. So I put my mortgage repayments, I put my bills that I know are coming in every month, I put all that money in an offset account, and then everything automatically gets paid out of that. So I don't have to think about paying my energy, gas, water, or NBN, or all of that just comes out of the offset account. And you can also have multiple offset accounts with many providers let you do that. Yeah, I was doing that the other day, figuring out how to set up a second offset account so I could label it with something different because I wanted to have my Christmas savings fund all linked to the same variable loan. So I did some playing around in the back end and figured it out, opened up a second account, labeled it, and linked it to my offset. So yeah, you can have a few.
Super effective. Yeah. So most banks offer this with your mortgage. If your mortgage doesn't have one, shop around for a different bank because you can get it included. And the key thing is the offsets the interest, which allows you to pay down the principal faster. So not only do you save more in interest, effectively, you also pay down your principal faster, which is a key thing. Okay, Rounded Up Investing, Kate. The company that pioneered this in Australia was called Acons, then rebadged as Raise. So Raise Invest is a thing that a lot of people know. I've got it on my phone right here. How does it work?
Yeah, it's a micro investing app. You can start investing with $5. The great thing is that really was quite different to everybody else is it would let you have a regular contribution set up. So every week when you weren't even thinking about it, $5 or however much you set up automatically got taken out of your bank account and invested into your chosen portfolio. And you could also turn on round up features. And so it would count all those things. Like when you made the coffee, it would round it up and take extra money to put it in your investment account. So slowly but surely it was growing. And I think direct debits if you can set that up either manually or using whatever broker's tool, having direct debits from your bank account into your investment account can be really powerful because then you don't have to think about it and it's happening in the background. It's similar to the concept of your employer paying your super on a monthly or quarterly basis. You don't have to make that, as long as you've chosen your super fund and set it all up correctly, there's not really much mental decision making on that monthly basis. The employer automatically sends that money to your super fund and it automatically gets invested. And your super fund's not saying, do you want to invest this month? It just does it.
Yeah. So that's great. So Raise is the opportunity for you to use that roundup feature just to invest. And they've got like these pre-built kind of like recipes or blends that you can just put your money in and it automatically is invested into those. Some extra perks for Raise is they also have their rewards program. So if you book a hotel through booking.com or you shop on like basically any e-commerce site, you can do it through Raise. And typically you don't pay more. You just want to check that. But typically you don't pay more. It's just you might have like 2 or 3% of the purchase price reinvested into Raise in 90 days.
Yeah.
So $100, you might get $3 invested in via Raise. You can also do recurring payments and all that sort of stuff to top up your balance.
Similar to cash rewards, but instead of getting that money paid out into your bank account as cash, you get it reinvested into your portfolio. So
yeah. And
if you're shopping anyway, you might get a little boost to your portfolio.
Yeah, may as well. The next one is Perla. Special mention to Perla, who is a sponsor of the show, a long-term sponsor. They did not pay us to say anything on this episode. We are just acknowledging that they are a long-term sponsor. But Perla is a brokerage platform that was built basically for long-term investing and automation.
Yeah. And so you can set up, I know you've done this with some of the company money, but you can set up automation so money is automatically direct debited from your bank account as often as you so please, and it's put into your portfolio, and then you can set up different rules. So when it hits $1,000, the money is invested into XYZ, ETF or stock, or this
set of portfolios.
This set of portfolios. So you could have a range of different ones. So once you've done all your research and decided on your ETF portfolio, you can set up some rules and it can happen in the background without you having to think about it. So I'm hoping more and more brokers start to offer these kind of features because, like, wouldn't it be great if CommSec did it? Yeah,
and it's great for Perla too because if you think about it, if you have like a ETF portfolio, it's got 5 ETFs in it, and every month it's either rebalanced or invested into. Every time there's a trade, Perla gets a fee. So it's actually great for them, and it's great for you because it takes all that hassle away.
Yeah, you'd think brokers would want to encourage automation.
Yeah, that's it.
Maybe it reduces the concept of selling.
Yeah, maybe people
because you're not logging into your account as
often. You never have to log in. Yeah, because I was chatting to Perla the other day about this. I don't think they count a login as something automated. So people can just invest without even logging in, which is something that I do. I don't want to log into my broker. Like I seriously do not want to log in.
So maybe that's like psychologically one of the reasons why the bigger brokers wouldn't want to add automation.
Because the bigger brokers rely on you to trade every day and they want you to like be impulse purchasing or impulse selling.
Yeah, because that's the broker model. You make money from those buy and sell. So you want to provide as much information as possible to get people transacting on a regular basis.
Yeah, that's it. And I mean, they're not all the same, but that's just a general. But yeah, I mean, with Perla, you can automate. The key distinction with Perla from an automation perspective, just a bit geeky for a sec, is it pulls money. So it doesn't wait for you to push it, it pulls it. So that's because you link your bank account to it and it can see how much is in your account, your savings account, and it can go, okay, Kate's bank account has just hit $1,000. That's the one she uses for investing. Let's pull that and let's invest it. So that's the key difference. It's kind of like how Raise pulls it when it does a $4.50 payment, it knows there's 50 cents available, whereas a lot of the other brokers will still rely on you manually sending the money or pushing it across. So that's that one. Kate, let's move on to CommSec Pocket. CommSec being the biggest broker in the country, but CommSec Pocket is a little different.
Yeah, I'd say, you know how when you used to download apps like 10 years ago and you'd have the light version, which was the free one that had limited features and tools. CommSec Pocket's the light version of CommSec. So it's a different app. You get a different holder identification number. You get a whole different experience. And it's really focused, I'd say, at the 20-year-olds and 30-year-olds that are just brand new to investing because they put training wheels on. You only get an option of 7 different ETFs as far as I know, unless they've changed in the last
that's what I remember
week
seeing.
Or so. So you can automate that direct debit and the investment into about 7 different ETFs, and the brokerage was quite a lot lower. And so you can have this happen on a regular basis. They have their own separate education newsletter and they have notifications. So it's quite a nice experience for your very first one, but it's a very limited range of ETFs and it wouldn't probably be enough choice to form your core ETF portfolio.
Okay. So it was obvious why CommSec did this, because CommSec couldn't drop the cost on its other brokers because it's so valuable. But also it realized that younger people are leading the charge. And younger people become older people with bigger balances.
Yeah.
So how did it do that? Well, it started CommSec Pocket, which you rightly acknowledged is CommSec, which is CommSec's light version, and it keeps them in the ecosystem. But it's great because that has actually scaled really quickly. If I'm not mistaken, it's over $1 billion invested via CommSec Pocket.
Oh, wow.
Yeah, so it's a huge platform already.
Yeah, I'd like to see them innovate a little bit more with that and add some more choice. But then again, choice comes with analysis paralysis. So maybe they've found restricting it to 7 really works for their customers.
7's a magic number, yeah. Okay, the next up is Sharesies, straight import from New Zealand, where it dominates. It's come to Australia. It offers a huge range of ETFs, shares, not just from the ASX, but New Zealand and global markets.
Yes, so another newer broker that lets you automate into shares, ETFs, and from very small amounts. We're talking at less than $5 here. So you can automate it. If you had a whole range of different things you wanted to invest in, you can set that all up in the background so it automatically happens. I haven't looked at that recently, so I don't know if it can pull from your bank account, but that would be worth looking into, because if it can direct debit from your bank account, that makes your life even easier.
Yeah. Shout out to Sharesies, but also Vanguard does something similar to this, where it's not the small amounts, but they can allow you to automate, I think they call it, from $250
Vanguard Personal Investor.
Vanguard Personal Investor, yeah. So let's move to robo-advisors. They're still called robo-advisors, even though really what they do is they just provide a ETF portfolio, like a blended portfolio, and they allow you, they try and do some tax optimization around buying and selling. With that said, how can you use that for automation?
Yeah, so these providers, the main ones in Australia are Six Park, StockSpot and InvestSmart. We should mention that InvestSmart is a long-term sponsor. We're not getting paid to mention them here, but they are another option to have a look at. You can choose one of those pre-built portfolios. So like we mentioned with Raise, they have pre-mixed portfolios you can choose from. Mm-hmm. These robo-advisors have pre-mixed portfolio you can choose from. And you might answer a few questions and they might say, based off what you said, you might like this portfolio, but at the end of the day, it's up to you. Yep. And then you can automate. Some of them will have minimums of $5,000 or $10,000 to start with, so it's probably for people a little bit further on. A little bit further on
your journey.
But you'll set it up. You say, I want this portfolio, and you can automate those contributions into the account. Mm-hmm. Some of them will direct debit, some of them won't, and they will automatically, when your account hits a certain threshold or a certain date, it'll put that money. So say it hits the $2,000 threshold, they'll go out and buy the 5 ETFs in that portfolio for you automatically. And so you don't have to think about making those individual decisions. And so they will also rebalance that portfolio. So
handy.
Yeah. So if your portfolio goes out of whack a bit because of the market, they might decide to rebalance, or they have investment committees that might decide, okay, we want to reduce the amount in this ETF and increase in this ETF, and they do that for you on your behalf. So
that's where the robo-advice, air quotes, comes from.
Yeah, so it's done on scale. It's not personalized to your situation, and they do charge a fee for that. So, most of these platforms, there'll be some fee, whether it's a management fee, an advice fee, or a brokerage fee. There'll be fees involved.
Yeah, we should mention, though, actually, you did mention something about advice here. One of the key distinctions with robo-advisors is it is actually personalized advice, but it's done at scale.
Yeah.
So it's not like the financial advice you get from a planner. It's the advice that's just mainly restricted to your share or investment portfolio. That's where the personal advice is limited to. But it is actually customized. You'll answer a questionnaire, you'll go through and blah, 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 blah.
Yeah, but they don't know your intimate life details.
They don't know if you want to buy a house or
they
if
don't know
you're
what your super
going
balance
overseas
is or
and all that sort of stuff. It's literally just your portfolio. Speaking of keeping track of things in a portfolio, ShareSite is the best tool, it's fair to say, in Australia. Best being the biggest, most well-known, and kind of says what it does what it says. With ShareSite, I think it's a freemium product, so you can get a free subscription to try it out, which is a great kind of funnel for them.
So if you've only got a few shares or ETFs, you probably won't have to pay a cent for it.
Yep.
I have a few different portfolios, so I use this tool to track everything in one spot, generate reports for my accountant at tax time. And the great thing is it automatically can pull in data from your broker, or you can set it up. So what I do is when I make a purchase or a sale in one of my brokerage accounts and I get that confirmation note in my email saying this is what we did. We bought this on this date for this price, and this was the cost. Here's all the details you need. I will forward that email to my ShareSite account. So they give you a unique email address for your portfolio. I forward it to that email and it automatically reads all the data and pulls it into that ShareSite portfolio. And so it keeps my portfolio on there up to date. So the value should be exactly the same as the value of my brokerage account, all being well. Sometimes you have to do some manual confirmations.
And it'll say, can you confirm this or can you confirm that?
Yeah, if you have a dividend or there might be a stock split or something like that, you might have to manually type in some details, but they're pretty good with providing guides on how to do things if there's something that affects lots of people. It's good keeping track of things, and so you don't lose any dividends. You might go, oh, there's a $10 dividend I received in the last financial year, but I didn't get it. And then you go onto your share registry and realize they don't have your bank account details.
So it's just sitting in Link or Computer Share, one of those platforms.
So it's a good way to make sure you don't miss any important things.
Yeah, so ShareSite's a great tool. And you can, to Kate's point, if your broker doesn't natively integrate with ShareSite, I think, for example, Self-Wealth, who is a sponsor of our other shows, they don't natively integrate with ShareSite, but you can get those broker confirmations, which then send the message to ShareSite.
Yeah, and if you have a historical portfolio, you can download some data
Excel.
from your broker and upload it into ShareSite to kick the ball off if you're not starting from scratch here.
Yep. And lucky last, a special shout out to Xero. For those of you that listen to the Australian Business Podcast, Xero is used by me and by most of Australian businesses to automate everything finance related. So I was chatting to some guys on the business podcast the other day, some accountants, and they said the optimal number of bank accounts for a business is between 2 and 3. I did not know that because I had like 6. So I went and deleted them.
Of course you did.
But 2 to 3 bank accounts is the key level, because one, you can make sure you have a transaction account, a savings account, and then you can have like an other account for like cash or something sitting aside. And it allows you to, Xero allows you to read your bank statements automatically, send that to your accountant who checks it and makes sure everything is allocated correctly. Like, is that a tax deduction? Is it not a tax deduction? Is super due? Is super not due? You can store your employee details automatically. Fantastic. And it integrates with like hundreds of other tools.
And you can automate like payroll and super through that?
Yeah, you can. So this is the key thing that I didn't know when I started a business, is that you can pay your super from Xero. So you just click a button that says authorize, and then a few days later it takes money from your bank account. Because otherwise you've got to have a partnership with a super fund that then sends it to other super funds. It just gets really complicated. Just put all the employees' details in Xero when they onboard, and it will automatically send. So really helpful, really helpful.
There you go. Tips for any small business owners and the Australian Business Podcast.
Australian Business Podcast. Yes. There's a bonus automation for side hustlers and for small business owners. Kate, before we let people go, just really quickly, there are some things you shouldn't automate. And we talk about these in the course. We won't cover them in depth here, but just so you know, there are some things that shouldn't be automated. One of those are subscriptions, because you want to be able to negotiate every year for the subscription, maybe get a savings if you buy annually. The second thing is, you don't want to do things like car insurance, because car insurance is something where you get a loyalty tax, meaning the longer you stay with the car insurer, the more likely you are to pay a higher amount. So negotiate that thing down. And there are many other things, but you can typically just set those calendar reminders where, oh, I know my car insurance is coming up, I should go and negotiate now. And we're not talking about small amounts of money. You could save hundreds of dollars. So please, there are some things you shouldn't automate, but the world is getting better in finance because we have to spend less time on it, Kate, because we can automate.
Yeah. So pick one tool, pick 2 tools, and see if there's any way you can automate some area of your financial life, even if it's just putting your electricity bill on a direct debit plan, so you don't have to think about it every month, because who wants to think about their electricity bill? Yeah,
that's it. I think I use 7 of these things. There you go. All right. Well, Kate, as always, thanks for joining me.
Thanks for listening, everyone.